Hello everyone, my name is Financial Charles and welcome back to another Bitcoin video. Today is August 13th of 2023 and once again Bitcoin's price is around 29,400, so very low volatility that we've been seeing over the past month or so. And in today's video I wanted to talk about Bitcoin versus the S&P 500, and I want to compare these two because the S&P 500 is considered to be the standard in terms of investing. Historical data has shown that throughout its history, the S&P 500 returns on average 7 to 10% a year. So they say that it's a very sound investment and that 9 out of 10 investors, over 9 out of 10 investors would be better off buying the S&P as opposed to buying random stocks or selecting stocks that they think will outperform the S&P, because everyone thinks that they can outperform the S&P. But if 90% of hedge fund managers cannot outperform the S&P, what makes you think you as a regular person can outperform the S&P too? So the problem with the S&P 500 though is that even though it's growing at 7 to 10% a year, real inflation is greater than 7%. And I'm going to show you this chart. This is a Michael Saylor presentation, and if you are a Bitcoin maxi, you already know who Michael Saylor is, and I will be sure to make more videos about Michael Saylor in the future. But they always want to tell you that inflation is 2%. The dollar inflates at 2%, and that's a healthy rate, right? But that's CPI inflation. This is a chart from MicroStrategy, which is Michael Saylor's company. The 2% inflation rate, that's for CPI. That's the Consumer Price Index. So that takes into account goods like food and gas and all that stuff. But real inflation, when you take in consideration everything that's not included in the CPI, such as other asset classes, you will see over here actual inflation is really over 8%, almost 10%. So the S&P is really not outperforming it. If you want to go by the CPI inflation, yes, you could say that the S&P 500 outperforms inflation over time. But in terms of real life inflation, you have to buy the S&P 500 to simply keep up. And not even keep up, but slowly bleed over time. And to prove this point even more, this is the Bitcoin chart. Let me just turn off my drawings real quick. And I want to show you this chart right here. This is the M2 money supply. So this is the amount of money in the system. So as you can see, all the way back here, it's been growing ever since the beginning. It's been going up and up and up. This is the amount of dollars in circulation. The amount of dollars keeps going up, and when this happens, the dollar itself becomes less valuable, and other desirable assets become more valuable in terms of US dollar value. And this is inflation. I want to show you the S&P 500 right here. Let me not show you that one yet. I'll get to that later. That's the important chart. This right here is the S&P 500, the value of the S&P in terms of its US dollar value. So as you can see here, yes, it's up and to the right, and it averages returns of 7 to 10% a year throughout its history. But if you take the value of the S&P 500 and divide it by the money supply, you get this chart right here. So this is the S&P 500 in relation to the amount of dollars in circulation. And this is starting all the way from 1960. So let me go back to this S&P 500 chart here. As you can see, ever since, let's see, the 60s is, somewhere around here. It's just up and to the right for the most part. But then when you actually compare it to how much dollars are in circulation, we're here right now. We're not even at the same value, like the dollar. How do I explain this? We're not even at the same value as we were in the 90s with the dot-com bubble. The dot-com bubble is really the peak, and we haven't even been there ever since. So sure, the S&P 500 is growing in value, But because there are more dollars in circulation, we are not even nearly as high as we were in the 90s with the dot-com bubble. And this is a chart that really shows that in reality, the whole thing is just sideways. This is a sideways moving channel. Sure, it will go down, then it'll go up, but from here to here, it's a sideways movement, which really, if we think about what that means, it kind of means that the S&P 500 goes up in value due to the fact that there are more dollars in circulation. Right now we're at the same valuations that we were at over here in 1961. Can you believe that? Now, in terms of where this is going from here, I don't know. I don't know if this is resistance that we're at right now and it's going to keep going down. I don't know if it'll break resistance. I have no idea. But this highlights the value of Bitcoin, because if we look at the price of Bitcoin divided by the M2 money supply, we get this chart here. And as you can see, it's just up and to the right, and it looks very similar to the actual Bitcoin chart. So even against the amount of dollars being printed, Bitcoin has proven to go up throughout its history. So, and let me explain to you one more time why 21 million Bitcoin is so important. If there are unlimited dollars in circulation, but there are only 21 million Bitcoin, all these dollars are entering into the Bitcoin ecosystem. That makes each unit more valuable. Once again, you are dividing infinity divided by 21 million. So let me pull up this calculator here. Let's just say 42 million. Let's say there's 42 million dollars in the Bitcoin network, right? $42 million worth of value. And you divide those $42 million by, 21 million, which is the amount of Bitcoins, and you get, $2 per coin. What happens when BlackRock allocates $8 trillion into a protocol in which there are only 21 million units forever? You're taking 8 trillion, so 1, 2, 3, 4, 5, 6, 7, 8, 9. This is $8 trillion right here, and you are going to divide it by the amount of coins in Bitcoin circulation. Did I even do this right? Hold on. $380. 8, 1, 2, 3, 4, 5, 6, 7, 8, 9. This is 8 trillion, right? Divided by 21 million. Alright, something's not right here. Well, it's alright. It doesn't even matter. 8 trillion / 9 trillion divided by 21 million is about $500,000 per Bitcoin. And the more money that is printed, the more money goes into Bitcoin, which raises the price of every Bitcoin. So if the whole entire world starts trading in their US dollars for Bitcoin, everyone benefits, because everyone has a piece of the pie. Whenever someone contributes money to the Bitcoin ecosystem and they buy Bitcoin with their US dollars, they're buying a fraction of that pie of 21 million divisible units, and that pie it's growing for everyone. Every Bitcoin holder benefits. So this is the way out. This is the way out. I don't know how to put it any other way. Let's see if I had anything else that I wanted to talk about today. And another thing is Bitcoin, if you hold it in cold storage in a hardware wallet like a cold card, no one can ever take that away from you. They can attack you with a $5 wrench, and you might be incentivized to give them your coins at that point. But you can say the exact same thing with the S&P 500, and someone can attack you with a $5 wrench and tell you to withdraw all your money that you have in your brokerages, all your money that you have in your checking account, and send it over to them. But with Bitcoin, if they kill you with that $5 wrench and you don't give up your keys, those keys die with you. They will never have access to your coins because you died. They killed you, and now there's no one to give the keys to. So this incentivizes This incentivizes negotiation as opposed to incentivizing violence. If someone has a ton of gold at home in their safe and an invader comes in and they attack them with a $5 wrench until, they tell them to unlock the safe, or, if they kill him, they'll just take the safe. They'll take the safe. They cannot do that with your Bitcoin. So, yeah, again, it incentivizes negotiation as opposed to incentivizing violence. And, the S&P 500, where are you holding the S&P? Are you holding it with Vanguard? Are you holding it with Fidelity? And I know that these are public entities that are, FDIC insured, but at the end of the day, it's not you that is holding that S&P 500. It is not you holding it. With Bitcoin, you are the one that's holding it. There's no third party holding it for you, and that's assuming you withdraw off of Coinbase. Because if you keep your coins on Coinbase, it's Coinbase's coins. They're in possession of the coins. You are not in possession of the coins. You have an account that says that you have a certain amount of Bitcoin, and that's it. But that's not actually your Bitcoin because it's not your wallet. And that's what not your keys, not your coins means. Another thing about the S&P 500, the S&P 500 represents the top 500 companies in the United States, and these companies are controlled by CEOs. And CEOs are human too. So, and humans, they all have flaws. All humans have flaws. What if the CEO of a company goes crazy and now they're making moves that you don't necessarily agree with? You don't have control over what they do and what they don't do. The S&P 500 does not. It follows the top 500 companies in the United States, and then the CEOs of those companies can do whatever they want, whatever they please. Doesn't matter if you agree with it or not. With Bitcoin, there's no one controlling, the potential of where Bitcoin is going. Bitcoin is neutral. Bitcoin will always work. You could tell everyone in the world to stop using Bitcoin, and at the end of the day, you cannot shut it down. It's a decentralized entity. It's like trying to shut down the internet. It's like you can shut down all the electric power grids, but what incentive do you have to shut down all the power grids? That's the extinction of humanity right there. You're not accomplishing anything. In fact, if any big supervillain, were out there, instead of shutting down the power grids, they have more incentive to buy into Bitcoin as well. They have more incentive to gather a piece of that limited 21 million pie as opposed to trying to shut it down. There's no benefit to anyone trying to shut it down, and you can't even shut it down. There are nodes and miners everywhere that keeps the blockchain up and running at all times. There's no shutting it down. All these powerful entities like China, they've tried to ban Bitcoin. They try to do all this stuff, and tell me, why are they buying Bitcoin now? Why aren't they still trying to shut it down? Is because they realize that they cannot shut it down. Every entity in this world is now racing to get a piece of this 21 million pie. All retail investors, all low class, middle class workers, they're trying to get a piece of the pie. And these big companies are also trying to get a piece of the pie. All these institutions are trying to get a big piece of the pie. The problem with these institutions, the reason that they're not going all in, is because they have limits to what they can do. There's rules and regulations that they have to abide by, which is why BlackRock, that's why they didn't pour $8 trillion in yet. It's because they have to get the ETF approved and all that. But at the end of the day, Bitcoin is the secret's out. Pandora's box has been opened, and now is simply just a race to accumulate as much as possible. And yeah, let's see if I had anything else to say. No, I don't think so. So I'm just gonna wrap the video up here. Again, I don't want to make it too long. I'm trying not to go too all over the place. So I thought this was a pretty good video, but in the future the videos will become even better and better. So that's it for today. Thank you guys so much for watching, and if you enjoyed the video, please like and subscribe. I would really appreciate that, and I will see you guys tomorrow.